I've tried really, really hard to make sure that everybody's set up for this cycle. I've tried to communicate it. I've gone out a lot to say, don't fuck this up. Buy and hold, don't use leverage, use cold storage, do the right thing, don't get too speculative, don't FOMO, just don't fuck this up. This is the biggest opportunity we've ever been given. I've said that all the way from 2020 onwards. And in fact, I said it all the way back in 2012. It's the biggest macro trade of all time. Don't fuck this up. And if you're not a crypto person, technology is one of the biggest opportunities we've ever been given, the exponential age. Again, don't fuck this up.
A growing number of individuals and analysts are increasingly optimistic about the future of Bitcoin and the broader cryptocurrency market. In April, Standard Chartered banks declared that the crypto winter is over, forecasting a potential $100,000 price for Bitcoin next year. In March, the CEO of the investment management firm VanEck suggested that we are entering the initial stages of a multi-year cycle in both gold and Bitcoin. Crypto financial services platform Swissborg predicted a potential surge in Bitcoin's price, ranging from $42,000 to $556,000, contingent on the approval of BlackRock's spot Bitcoin exchange-traded fund by the U.S. Securities and Exchange Commission. Raoul Pal, in a video presentation, emphasized the significance of understanding market cycles and their correlation with economic conditions, particularly in the crypto market. Pal characterized the current cycle as the crypto spring, underscoring that it presents the optimal time for involvement in crypto and acquiring knowledge before the cycle transitions back into winter. He offered a comprehensive analysis of these cycles, along with investment advice and personal experiences, aimed at assisting those interested in investing during this phase.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Crypto has gone bananas. Bitcoin's up 119, ETH's up 63, and Solana's up 500%. So pretty good. And exactly in line what I've been imagining, which is macro spring. Macro spring and crypto spring are the same thing because macro is crypto. I've explained all the way through. These are not different things. And there's a bunch of old macro people who are like, oh, I don't like that bloody crypto stuff. It's nothing to do with macro. It's driven by exactly the same cycles. It's completely in line. So spring, what is spring like? Spring is one day it's raining, next day it's sunny, then there's frost, then it's getting warmer, then you think it's going to be amazing. You get your t-shirts out and then it's freezing cold again. That's what spring is like. That's exactly what macro spring is like and crypto spring. So we saw spring and we saw choppiness, sideways ranges, a squirt up in the beginning, then slowed down. And then we're now getting into late spring. Late spring, we're starting to see what I refer to as the banana zone, which is this massively positive end of year phase. Normally speaking, again, probabilistically speaking, no guarantees around here, so don't try and hold me and go, well, it didn't go up at the end of the year, you're a bastard. I'm bored of that stuff. Probabilistically speaking, it goes up into the end of the year, and usually fast. And nobody catches it, and everybody's chasing it because they're all trying to chase performance for the end of the year and prove to their investors that they had the right trades on, which obviously they didn't because all the institutions have been massively underweight. So that, I think, is what's taking place, and that's usually the end of crypto spring and macro spring. Then we start transitioning to summer. Summer is when rates start coming down, box looking like it's starting to be ticked. When inflation falls, that's happening. And as you know, my views on inflation are it is not sticky, it's mean reverting, and it will go back down to 2% or lower. I think it actually goes negative in this cycle, and I think core inflation will go negative this cycle too. And that's what we're going to look for in 2024. And that will take people by surprise. And I think the Fed purposely orchestrated it. They want it. They want to see rates lower so they can refinance the debt. So interest rates falling, inflation falling, unemployment rising. And then when you look at the forward-looking indicators, growth will be picking up from the floor. That is the perfect macro environment. Then we're coming into election year, as all of these macro springs have been since the Great Reset of 2008. They're all the same timing. Macro summer is the same as the election year, is the same as the halving year in Bitcoin. It's all the same bloody thing. So that is about to play out. So 2024, I think, is going to be a pretty wild ride. Normally these years tend to have periods of sideways consolidation or corrections, and then these huge spurts. And we tend to see a couple of those during the year. So nothing can be a straight line, but it should be an extremely good year. And then 2025 will be even better. That's usually the batshit crazy year, which is the transition from macro summer into macro fall, where everything kind of goes exponential before you start transitioning to winter, rates start going up again, markets pull back again, and we go through the same cycle. And that's been happening consistently since 2008.
Raoul Pal also recounts an investment play and guides us through a process reminiscent of the experiences of many investors in the crypto market. Using it as a tutorial, he imparts crucial lessons to aspiring young investors, emphasizing the significance of conviction and patience in the investment journey. Despite Bitcoin's impressive 120% year-to-date surge, the leading crypto asset remains approximately 46% below its November 2021 all-time high of $69,000. It is normal for some investors, particularly those who entered at the peak, to anticipate more significant upward movements before sharing in the excitement. Pal assures that these substantial rallies are on the horizon, drawing parallels with past cycles. The key, he suggests, lies in cultivating patience while consistently and carefully nurturing conviction in the asset class and its future in global finance. To underscore his point, the macro guru shares a personal anecdote about a previous Bitcoin investment, highlighting the importance of timing and the challenges of holding on to convictions. For further insights, let's delve into the video and listen to what he has to say.
Simply hold until new highs. Right, I'm going to tell you a story. I keep telling this story. Look, it's horses for courses, as the English expression goes. I first bought Bitcoin in 2013 at $200. My thesis was this is a 10-year bet, and I think it's worth $1 million, but I'm going to discount myself by 90% for the moron factor. So therefore, it's worth $100,000, and it's at $200. And I said, this is the best macro bet we will ever be given, and the best macro bet we have ever been given. That was 2013. I was pretty impressed if I look back, because it was exactly the case. So I rode it up, and it went up to 5x from where I bought it. Then it collapsed 85%. And I'm like, fine, it's an option for me. It's a 10-year bet. It then ran up 10x into 2017. 4 years later, I'm up 10x. And I got a bit nervous in the space because of forking wars and other stuff. And I stupidly forgot the initial premise of the trade, which was this 10-year bet, you just run it. Because when the P&L stacks up, you start thinking, well, really, do I want to give this back? But you've got to learn how to do that if you're running long duration time horizons. So I sold out at 2,000, 2,500, and it went up to 20,000 in that run. And people were laughing at me, and I was like, look, I've made 10x. Thank you very much. I've done this really, really well. And then I watched it and watched it and watched it, and then eventually got the entry point to get back in again, which was April 2020, and it fell back down. I think I got in 6,500 and bought it, from 6,500 to about 12,000 and kept buying it, and it rocketed higher and much bigger position than when I first started. Okay, great. And I still own it today. It's pulled back up again. Okay. So I went back and looked, if I just kept my original investment and not touched it, even with the market down from its high 50%, I'd have made 5 times as much money. And my bet in 2020 was a lot bigger than it was back in 2013. And then here's the real crux. And me and backwards baseball cap Brian were talking about this before we came on, is like, if you just remember that log channel and that the big cyclical up and downs, which is the economic cyclicality, if you just buy within 30% of the low, which is not that difficult, 30%, you don't even have to be bottom ticking it. I just calculated I got 30% near the low. If you'd have just added my original bet, which wasn't that big, it would have been 25 times as much performance. And that was the lesson learned. That's why I didn't sell a single thing and I kept buying. My duration really for this is, I will probably take some off the table in this trade. My duration, my real bet is to run most of it until 2030. That's always been the game, and it remains the game for me. Obviously, peel off some lifestyle gains, do whatever you need to do, appease the wife, that kind of stuff. But I think 2030 is the horizon. But you do you, I do me. I have a stomach for risk. I've been doing this for a long time. I actually enjoy the risk of crypto. I enjoy the shit throwing when it goes down 70%. I'm buying like crazy, and everybody else is like, "You bastard! It's terrible. It's the worst investment ever." And then you go back 3 years later, and it's like 10x where they were all selling it. It's just it's a ridiculous business, but it's a lot of fun as long as you understand the game that you're in. If your game is you need those profits, for goodness sake, take the bloody profits.
SEC Chair Gary Gensler's recent speech on X triggered a heated response within the crypto community. In his address, Gensler reiterated the SEC's mandate, quoting the words of the first SEC Chair, Joseph P. Kennedy, about the agency being partners of honest businesses and prosecutors of dishonesty. Ripple's lawyer and various crypto community members criticized Gensler, alleging a contradiction between his words and actions. Stuart Alderati, Ripple's chief legal officer, called for fact-checking, accusing Gensler of prejudging crypto and filing suits without thorough investigation. Alderati also asserted that Ripple was sued but never charged with dishonesty, and he criticized the SEC for engaging in shady behavior, suggesting a decline in international relevance. The crypto community's response extended beyond Alderati, with figures like Eric Voorhees, CEO of Shapeshift, highlighting Gensler's prosecution of honest businesses. A Twitter user acknowledged the original vision quoted by Gensler but argued that it has evolved for the worse, accusing the SEC of facilitating the legitimization of a corrupt system. The note also mentioned delays in the SEC's decisions on Franklin Templeton's and Global X's spot Bitcoin ETF applications, contributing to increasing uncertainties and a loss of faith in the SEC's credibility. As uncertainties rise, the note concludes by posing a question to viewers: whether we are currently in a crypto spring or if Raoul Pal's optimism is misplaced. Viewers are invited to share their thoughts in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.